All right, so those of you that were here for, actually listened in on the webinar, you get the freebie of the goodie of Cliff Natural Resources as a door prize for enduring the webinar. All right, so now we'll take a look at Brazil, and what you can see here was a Z pattern. Down in this area as it finds support at the -2. But now we have a failure before it even gets back to the Bollinger Band mean. This is still a short signal, especially when it opened lower than the previous day's low and even took this one out. This is definitely a short. We're looking for it to come back to 42. A stop and reverse here would be at 44 or 46.40, and we'd be playing for Bollinger Band mean far side of the river. But this one's looking like it's headed to 42, unless we get some kind of enormous global turnaround. Unlikely in my view. All right, we'll take a look at, let's see. Let's try some gold here. Now this highlighted area, so you guys may recall some discussion in the chat room this week on silver, which we bought. We'll take a look at silver next, but it's basically the same chart. And that was this, on silver, this was a Z pattern down here. But this is about all you can expect on a kind of a counter trend rally, from 114 to 118, about a 4% move. But it's right at that critical spot here at the Bollinger Band mean. And now I will tell you that this is all up to the broader market response in this critical state. If we get if we get broad-based buying this week, gold's going to continue to kind of lag around where it is. It's still quite a distance away from its long-term fair market value, which I would put it up here around 1200, 1224. So there's still, $4 on the upside here. And even if you use the bottom of the dragon here, this is a 2 points worth of risk. You still have a nice 2-to-1 on a resumption of gold. And I think we're going to see the same pattern when we look at silver. Yeah, almost exactly. Only silver hasn't gone as far as gold. And this is actually a more orderly move in silver, which is why I like it. It's an RLCO here. It was a P7 right here. And we still have room to get to 1750, 18 1/4, and then 19 on the far side. And really 18 is really where fair market value is on this RL270 is the pink line. We take that as the long-term fair value. And so this divergence away from fair value is what creates that RLFF, the regression line fractal framework. And we've got a third of that move has started to form already. The easiest third, if you will, but still, there's still 2 units of reward to the upside. Let's take a look at Coca-Cola and see what relative strength looks like on the other end. I mean, you have to love that. In the highlighted area, you have this nice tight channel where you have the pinch of the Bollinger Bands. Now, the Bollinger Bands got wide after it had this sell-off and then a big gain. That's why these Bollinger Bands get so wide. And then in this consolidation zone that I'm highlighting, this Bollinger Bands pinch, and now what that sets up, the failure to fail there is a tell, and now we get this nice move to the upside from 42 1/4 up to 44 1/2, and still more room to go. I think 48 is definitely within range of this one. and you'll notice from the volume stats on this side, the last selling pressure was down here at 43.50. You had a ton of volume on Friday buying it up. And you had a lot of hands changing right here around 42. So depending if you want to play a tighter stop of $1 or a wider stop of $2, I still think Coke is an auto buy anytime you see it moving up, and certainly if it's moving up faster than the S&P. A perfect storm would be the S&P gapping a slight gap down and then moving up with power, Coca-Cola moving up with power and faster than the S&P, and then takes out 44.5, and that's an auto buy with $1 stop. Let's take a look at Home Depot. This is showing a pretty strong resistance to all of that horrible selling pressure of the last 30 days. Home Depot has done nothing but just maintain, and that's in the face of all that index selling. It's still been able to, there have been people stepping up and buying this rascal, and to me, that's a really positive sign. It doesn't go down over the last 30 days. I mean, I take that as up, up, and away. And you can see it's still a fair chunk north of its regression line, the long-term fair value, which has done nothing but go up and go up and go up. And it's held certainly above this 88. So I really like Home Depot here. That's a good-looking chart. Okay, energy was the worst of the sectors, so let's take a look at a couple in the energy complex. This is XLE, and now what we have is a P7 in the regression line crossover system. We're down here well outside the floodplain. The dragon has completely come out of the river as well, and nothing but selling pressure down here. You know, that corresponds with the price of oil too, and so the long-term fair value is up here around 97, where that 270 regression line just has started to roll over. So really, we would want to buy this not later than an entry in the river around 88.5. But I think you can buy this north of 85.5 or 86 with a couple bucks on the stop, and that would give you a ladder of gains. It looks like this: 92.40. 95 and then 97 on the upside. So that's quite a move downward in energy. And we'll see how that is reflected also in USO, in the oil ETF. It's really the same thing. You've had kind of an extraordinary sell-off here. You know, a 10% loss in the price of oil. This was pretty close to fair value here up around this RL270, and now you've got an extreme that ends in a doji outside of the floodplain. So that's a perfect P7 pattern if ever there was one. So I'd be a buyer at 32.5 with $1 stop, and then this is your price ladder on the way up. On the other hand, if we get a failure below 32, then down we go for another leg. Another $2 to the downside. Which would put it down around $30 even. So oil I would treat as being in a critical state as well. Okay, so that's everything I want to cover tonight. We've been at it for an hour. You guys hang in there pretty well. I'm going to get this one